Hey everybody, Yasin Nizami here with a quick update on Bank of Canada's this morning's announcement on the rate hike. They raised the interest rate by 25 basis points and now the overnight rate has gone up to 4.5%, which was pretty much expected by the market. The bond market was already pricing in, so there were no literally surprises by this announcement. So everybody was pretty much expecting it. Now, what they have said in addition to that is they're going to now take a pause. So they will now, take a break in terms of raising these rates and then assess the economy. Because as I said in my previous video, that these aggressive rate hikes have already done a lot of damage in the economy, both from an individual consumer perspective as well as from businesses as well. Because if you think that the debt that Canadians has accumulated in the last 2 or 3 or 4 years, that has been exponential, as well as the corporate sector, they also taken a lot of debt. So just like the government issue bonds for public borrowing, the corporate sector also does similar bond issuance, and as a result of that, they take public borrowing from the public. Now all of that debt is now going to be serviced. The payment on those bonds in terms of the interest is going to go up because majority of those bonds are on variable interest rate, just like our mortgages. So that debt service payment is going to cause a lot of financial trouble for our federal government, as well as businesses, as well as individuals like me and you. So and one of the main reasons why a lot of people were thinking that Bank of Canada should stop here, because we haven't seen the real impact of these aggressive rate hikes in the economy, because it takes time for these rate hikes to trickle down into the economy. So that's why I think it's a good news in a sense that now they're taking a pause to understand the real impacts of the economy before making any decision to further rate increases. One downside risk is that because the Federal Reserve hasn't stopped it yet. So if you look at the interest rate differential between Canada and US, that is going to play against our Canadian dollar. Again, the currency. So currency is going to take a hit against US dollar because the interest rate differential is a little bit lower. So that is the risk that we have to take. But again, Bank of Canada is walking on a very tight rope. They have to see the damage in the economy in terms of these rate hikes, because we are seeing job losses happening in the big tech companies. We're seeing we haven't seen the delinquencies yet, but it is quite possible, because as the rate hikes will go up, it is going to make a lot of financial trouble for businesses and individuals as well. So they have to make sure that they don't do a lot of economic damage, but at the same time they have to protect the currency as well against US dollar, because US dollar has a higher interest rate and it can attract a lot of capital in that sense compared to Canadian dollar. So that is a risk that we are taking as part of this monetary policy. But and Bank of Canada also said that they are going to take a conditional pause, which means they will see if the economic activity continues to go stronger, which means if the GDP goes stronger, it doesn't contract, and we don't see a lot of unemployment, then they can potentially continue with the rate hikes in the future as well. So we'll see, how the CPI plays out in the next 6 months and how the unemployment data plays out for us, also the GDP as well. So these three things will determine how the Bank of Canada monetary policy will shape up the financial and economic future for us in Canada in 2023. That's it from me this week, and I'll see you in my next week video. Take care.